how much does it cost to buy a home? Other than the listing price of the home, what else do I have to pay for? That's the question that's on every buyer's mind when they decide it's finally time to buy a house. But don't worry, because in this video, I'm gonna break down all the costs that you can expect to see when you go to buy a home, so stick around. What's up everyone, my name is Marc.izquierdo and I'm a real estate agent in Bucks County, Pennsylvania. If you're looking to buy, looking to sell, or you just want to talk some real estate, make sure you grab my contact info and feel free to reach out. So when you're buying a home, not only do you have to pay for the house itself, also known as the listing price, but you also have to pay for other things along the way, stuff associated with your mortgage, title, taxes, and things like that. And those are the things that we're about to talk about. But first I have to say that every real estate transaction is a little bit different. So in your particular situation, you may see some other expenses that I don't necessarily talk about here. However, I think this should give you a pretty good solid foundation of what you can expect. Now, while this isn't necessarily an expense, your down payment is the first thing that's really going to cost you. It's something that you're going to be paying at closing, and the amount's really going to depend on how much you're putting down, whether that's 3.5%, 10%, or 20%. So for more information on how a down payment works, check out my video on LTV and what that is, and I'll drop the link to that below. Like everything else in life, you're going to be paying taxes. In a real estate transaction, you're paying transfer tax, city tax, and school tax. The amount of transfer tax that you're going to be paying is based on the sale price of the property. In Pennsylvania, 1% of the sale price is due to the state as a transfer tax. The rest is due to the county, and the amount depends on the county that you're in. So in Bucks County specifically, it's another 1%. This comes to a grand total of 2% total in transfer tax, 1% to the state and 1% to the county. Typically this 2% is split between the buyer and the seller, where each party pays 1%, but that's something you can negotiate in your contract. So for example, if you were buying a $250,000 house, you as the buyer would typically pay 1% of that sales price in transfer tax, which comes to $2,500. Your city and school taxes are going to be prorated based on if the seller has already paid their taxes and when the closing date actually is. So a very simple example of this is, say the seller already paid their taxes, $10,000 worth for the entire year, and you're buying and closing on the property at the exact midpoint of the year. Since the seller already paid the taxes for the house that you'll be living in, you'll be reimbursing the seller for the second half of that year at closing, so $5,000. So that's pretty much a very simplistic example of how that calculation kind of works. Another prorated expense that you might come across is HOA fees if you're in a neighborhood that has an HOA. If the seller has already paid these fees, you'll need to reimburse them for it. This is essentially calculated the same way that the taxes are. Now to step away from prorated fees for a second, a recording fee is something that you might also be paying. Some documents that are part of the transaction are required to be recorded in public record. So for example, your deed. That'll typically cost you as the buyer around $200 to $300 to have documents recorded. Now we'll jump into some fees that are related to a mortgage. If you're not getting a mortgage, obviously you won't be paying these fees, but if you are getting a mortgage, this is what you can expect to pay. So there's fees to process or originate your loan, also known as a processing or origination fee. For that, you can expect to pay around $1,000 to $1,200. Your lender may also decide to charge you upfront mortgage points. 1 point is 1% of the loan amount. This can range from around 0 to 3%, and it really depends on the lender and your financial strength as a borrower. When you're under contract, your lender will need to have your home appraised to determine its value. This appraisal is typically something that you pay for, and you can expect this cost to run you around $400 to $600. You also have your credit checked and credit report ran. This can cost between $75 and $150. You'll also likely see a charge for a flood certification for around $25, and this is just to verify that the property that you're purchasing isn't in a flood zone. You'll also see prepaid interest, and this is mortgage interest that you pay at closing. And it's essentially the daily interest from the day of closing until the end of the month. So the cost will obviously depend on your interest rate, your loan amount, and the closing date. Escrows. So these are funds that are kept in an account that'll be used to pay your insurance and your taxes in the future when those due dates come around. So your taxes and insurance aren't typically due every month. They're usually due at one point during the year in a lump sum. So with an escrow account, you pay your taxes and insurance every month. Then when your taxes and insurance bills come around, they're automatically paid out of that account. So it is actually pretty convenient. Your lender will likely require you to initially fund that account with a few months of taxes and insurance. That specific amount will depend on your lender, specifically the lender that you're working with. Next, I'm going to jump into some title-related expenses that you can expect to see during your purchase. First one's an owner's title insurance policy. And the price of this varies based on the coverage and the purchase price of the home. But what this does is it protects you from claims made against the title of your property. So for example, if there was any deed forgery that took place, if there were random or undisclosed heirs to the property that are now claiming that the property is theirs, or if there's any unrecorded liens on the property, this insurance policy covers legal fees if you have to defend your title to the property. If there's a successful claim against your property, this policy covers any losses that you might incur. So a standard policy typically covers up to and including the date that your deed is recorded, and then there's an enhanced policy, and that includes a little bit more coverage and even future coverage. But for a $250,000 property with standard coverage, you can probably expect to see around $350 for this, which I think is well worth it. Another title-related expense is a lender's title insurance policy. So just like you have a title insurance policy for yourself as the owner, the lender, if you're getting a mortgage, they'll require you to obtain and pay for a title insurance policy for them. This protects the lender from any claims against the title of the property. A lender's policy can be more expensive than an owner's policy, so for a $250,000 property, I would expect around $1,600 for this. A loan endorsement. This is essentially an add-on or additional coverage to the lender's title policy. Now, this cost is going to depend on the house, but $400 to $500 is a ballpark number for a $250,000 house. You may also see something called a closing service letter. And what this does is it protects the lender against loss of funds due to any misconduct by the closing agent. And this will probably run you around $125. Then you'll see some title expenses that I kind of think of as costs of doing business. Those are e-doc delivery fees around $100, express mail fees around $20, $25, wire fees around $5 to $10, and notary fees around $50. There are also some expenses when it comes to getting your home inspected. A general home inspection, probably $700 is ballpark for a $250,000 house. Pest and radon inspection, $200 to $250 for a $250,000 house. A survey, that could completely vary depending on the property. If required by the title company, that's usually a seller's expense. But if you or the lender requires it, that's typically a buyer's expense. Any other inspections that you want to have, they're going to cost you, obviously, right? So you could bring out a plumber, you could bring out an electrician, a roofer, or really anyone else that you want. So how much you want to spend is going to really depend on how thorough you want to be with your inspections. As the buyer, you may be on the hook for paying for the cost of a U&O inspection by the local municipality. This is conventionally something that the seller pays for, but just keep an eye out for it, as the seller can easily ask you to pay for it. After the U&O inspection, there may be some repairs that the local municipality requires the seller to make before selling the property. And if the seller decides that they don't want to make those repairs, this could be on you to pay for them. You'll also have your homeowner's insurance to pay. This cost will depend on your coverage, but you should expect to pay 1 year's worth of insurance premium at closing. If you want to get a home warranty, you'll also have to add the cost of that into your closing costs as well. For the most part, those are the common expenses that you can expect to see when you buy a house. But real quick, I'm going to pull up an Alta statement from an actual transaction so you can see some real life costs that were paid by a buyer. So real quick here, we'll just run through an Alta statement real quick. So here is the sale price of the property. That's $220,000. This deposit here for $3,000, that's earnest money. So it's not really an expense, so I didn't talk about it. But this will essentially, you as the buyer, you're going to put this up when you submit your offer, or a couple days after you submit your offer. And this will essentially just go towards your down payment once the sale goes through at closing. So it's not really an expense, so like I said, I didn't talk about it too much, but that's what that is. This $165,000, that is the loan amount from the mortgage company, so it's a credit to the buyer. Here are this prorated taxes that I was talking about, city and school taxes. Here is a loan point that was charged by the lender for $1,650, right? That is 1% of the loan amount, so $1,650. And here's some more mortgage fees here. So the processing or that origination fee that I talked about. There's the cost of an appraisal, credit report fees right here. Your flood certification we talked about, $10. That's that prepaid interest from the closing date to the end of the month. Here are the initial escrows that you're going to be funding your escrow account with, right, at closing. So in this case, it was 3 months of homeowners insurance goes into your escrow account at closing, 8 months of city and township taxes, 3 months of school taxes. Like I said, this is going to be dependent on the lender, and your specific situation with your home purchase. So here's some title charges that we talked about, the closing service letter. These are these kind of costs of doing business that I was talking about, the e-doc delivery fee, the express mail fee, wire fees. Then you have your lender's title insurance policy that we were talking about. It's around $1,500. Notary fee, around $45. This is that loan endorsement that we touched on, $400. And there's not too much more going on. Here's the owner's title insurance policy. Much cheaper than the lender's, but there it is, $344.85. And this is just, depending on the broker that you work with to purchase your property. This was specific to that broker, so it's a $375 cost to the buyer in this case. And then here are the taxes, right? Transfer tax to the county, transfer tax to the state. If you combine these two together, that's 1%, and over here on the seller's side, that's another 1% for a combine of 2%. Here's your recording fee to Bucks County for recording all the required documents that are supposed to be recorded. And then here's your 1-year insurance premium for your homeowner's insurance, and that was due at closing. So these are just some like a summary of the costs, the credits and debits that the buyer experienced in this transaction. Obviously, they'll be different for your situation, but hopefully this helped show you a little bit about what an actual transaction looks like. Hopefully you learned a little bit about what you can expect to pay when you go to buy a house. When you're ready to start looking, or if you have any questions at all, don't hesitate to reach out. Thanks a lot for watching, and I will talk to you soon.